Today's guest is a supporting sponsor of Liberty in Finance. Welcome back to Liberty in Finance. We're delighted to have this returning guest. Tony Giardini is the president and CEO of Trilogy Metals, Inc. Today is Friday, January 30th, 2026. Tony, thank you for coming back on Liberty in Finance.
Oh, it's great to be back. It's been a while since we've had a chance to talk.
I was just going to mention that it's been longer than usual, and I have a feeling we're going to be hearing more from you and from Trilogy soon, because a lot of things are happening not only in the precious metals and commodities markets, but for Trilogy in particular. And that's been something devoutly people have been wishing for that for some time, and it looks like that's coming to fruition now. So we're going to hear about some of that exciting news coming from Trilogy just recently and looking forward as well. First of all, on that bigger picture of the precious metals and commodities markets, Trilogy is an interesting mix because the name implies there's at least three things going on. And from your website, people will find out that Trilogy is dedicated to advancing exploration and development of high-grade copper, zinc, lead, gold, silver, and cobalt properties in Northwest Alaska. That covers not only precious metals such as gold and silver, but also exciting, necessary and important base metals like copper and lead, as well as critically strategic metals such as cobalt. We're going to hear more about that from you, folks. Why don't you tell us right away about your view of the emerging importance and emphasis and capital inflows into the commodities sector?
Yeah, it's a great question, and I think a lot of what's been happening with Trilogy and really the turnaround that's happened in the story has largely been due to, the focus, particularly in the U.S., on domestic supply of critical metals, and we're a company that has two very strong high-grade projects. We have a project called the Arctic deposit, which is a volcanic massive sulfide deposit, and as Dunnigan, as you set out, it's precious metals, gold and silver, but as well, it's primarily a copper project with zinc and lead as well. Then we have a second project called Bornite, which is copper cobalt deposit. Now, Arctic, the one that we're most focused on right now, and it's advancing quite nicely. We have a feasibility study on it. The value of Arctic in the context of a current metal price environment is on a 100% basis, well over $4 billion on an after-tax basis. It's a spectacular deposit. And what's been interesting about metal prices is that whereas Arctic was typically seen as a copper zinc deposit, in terms of actual contribution of revenues now, it's more of a copper precious metals deposit. So roughly 55% of the value comes from copper, and about close to 30% now comes from precious metals, with the balance coming from zinc and lead. So there's been a real turnaround just because of what's been happening in commodity prices. And today, Friday, June 30th, as you set out, it's definitely a red day in the market. We're seeing a big correction in precious metals in gold and silver, and copper had a historic day yesterday, all-time highs in terms of trading around 14,000 on the LME, 650 on COMEX. Gold was well over $5,500. Silver was $121. So commodity prices have run up. I think today is, on the back of a bit of retrenchment, which is not necessarily a bad thing. You need to see some pullbacks happen. That is a very healthy part of a market. And I think what we're seeing today is just a bit of consolidation that's going to be happening. But I think a narrative for the metals that are part of the Trilogy portfolio in terms of Arctic and Bornite is still very, very robust. And it certainly feels like we're at the beginning of a very strong bull market in metals, whether it's precious or strategic metals like copper, in terms of where things are going.
We're hearing from other analysts to whom we interview on our channel, such as Michael Oliver from Momentum Structure Analysis and others, that the commodities sector is likely to be a recipient of capital inflows for the next several years. It is not just a flash in the pan. It's going to be a sustained rotation, a secular rotation into investment by all kinds of major funds and so on into the commodities space. So it's exciting to be talking to and bringing again Trilogy back in front of our viewers and subscribers at this time in particular to get ahead of that crowd. Now, one of the things that had been holding back progress in some ways for Trilogy in recent years was delayed permitting and, frankly, a fairly hostile administrative environment regarding an important and essential access road called the Ambler Road to one of your biggest projects. Without that road, it was difficult to make the kind of rapid advancement towards advanced development for production that is necessary to convince investors that they're on the road to seeing major movement by Trilogy on that maturation curve that is rewarded by the market, typically with higher multiples for investors. But there was a breakthrough just in fourth quarter. Can you tell us about what is the breakthrough regarding the permitting of the Ambler Road, and frankly, what's the administration's, the environment within which now you see that you're operating, and what you anticipate in that regards going forward?
Sure, and I think the change really started with the election in 2024, and with President Trump being elected and really highlighting a focus on critical metals and domestic supply of these metals for domestic purposes. It's really changed the narrative. And right from the beginning, President Trump and his administration came out and talked about the importance of advancing projects. And in some of the executive orders that President Trump came out and discussed, he really focused on Alaska in particular, on unleashing Alaska and really allowing projects like Arctic and Bornite to move forward, and really focusing on critical infrastructure that was needed to do that, which, as you described, is the Ambler Access Road. So what happened since President Trump was back in office in January 2025 is a number of initiatives were brought forward, initially through Congress, to look at ways of effectively reinstating the record of decision that had been issued originally by the Trump administration in 2020. And ultimately, what ended up happening was in October of this year, fourth quarter, as you pointed out, October the 6th, the president signed a presidential decree that he was entitled to sign under legislation in Alaska called the NILCA. And what that did was effectively reinstate the record of decision for the Ambler Road. It instructed all of the relevant agencies to issue all the necessary permits to ADA, who is developing. ADA is a development agency in the state of Alaska who's developing the Ambler Road. And those permits have now been issued and really focused on advancing the project in an expedited fashion. Now, what we understand from ADA is that the legislation that was used, or the presidential decree, which is called 1106 in ANILCA, is not subject to being overturned by the courts. Now, we'll see how that plays out, because you never know with these things. But at this point, what we understand is that the president's decision is final. It can't be overturned by a future president, because his ability to provide this presidential decree was because a permit had been denied previously. So it's very exciting for us, and it really allowed a couple things to happen. It brought in the Department of War, which is effectively the Department of Defense, in terms of being a strategic partner. They've acquired a 5% stake from Trilogy, but also 5% from our partner South32, who owned previously 11%. Now they own 6%. So when the deal closes, it's expected to close in March of this year. We would see some $35 million approximately go into the JV, which will allow the project to continue to advance. But more importantly, what we have is the federal government as a strategic partner focused on ensuring that this project moves forward in an expedited case as quickly as possible. So we're very excited about that. Share price has performed very well since that happened. We had incredible movement in the share price in October 14th in particular, and I think it coincided with announcements about shortages of critical metals and an investment fund that was being started by JP Morgan of $1 trillion in critical metals. Since then, the share price has settled back, but is performing very, very well. We're in a strong financial position. Trilogy is sitting with roughly $50 million of cash at the Trilogy level. There's additional cash in the JV, and once this money that comes in from D.O.W. comes in, it will effectively fund our expected program for the current year. So we're in a strong position to advance the project, and we're really focused on upcoming catalysts.
The investment by the Department of War is interesting because we're seeing that in multiple metals areas. It's as though there was this big awakening that just happened industrially and militarily and strategically, that all of a sudden, having gone from a just-in-time global supply chain is the smart way to go, to, oh my goodness, if we don't have domestic supplies of these critical materials, we're hurting here, and here, including many different ways, medically, sometimes industrially, manufacturing, defense, etc. Do you have any expanding to do on that particular aspect of the changed I guess the zeitgeist, the time that we're in of realizing that countries of the world are trying to lock down domestic supply, and how fortunate it is for the United States to have such as Trilogy in Alaska with the rich resources that are available there?
It's a great question, and I think we're very fortunate that D.O.W. has decided to make the investment in Trilogy. As you talk about domestic supply, I like to say domestic supply for domestic purposes. They want to see the metals being produced in the U.S. and ultimately being processed in the U.S. And they're looking at the critical nature of whether it's copper, zinc. Clearly, cobalt is one of them, but also the other metals that are there. And what they recognize that our district isn't about one mine. It's not about Arctic. It's not about Bornite per se. It's really about the district potential that exists. And just to give you and the listeners a bit of color, the Ambler mining district was discovered in the 1950s. So from the 50s to today, roughly 70 years, a total of 210,000 meters have been drilled in the district. Now that sounds like a lot, but if you actually divide it over 70 years, it's 3,000 meters a year. It's not a lot. And what we have is at Arctic, we have a deposit that's roughly 46 million tons, grading just over 5% copper equivalent. Now that's very difficult to find in the context of a current market environment. Any deposits like that have already been developed. And the reason this hasn't been developed is because of the infrastructure issue, the issue that this road wasn't there. There was no ability to access a deposit. So with the path now moving forward to advance the road, puts us in the potential to advance not just Arctic, but when I talk about Arctic, I'm talking about 70 miles of strike. So what we're really focused on is what is there beyond Arctic. And, if you go to our website, trilogymetals.com, and find the most recent presentation, you'll see information about these VMS deposits. And what happens with these VMS deposits is that they occur in clusters. So if you look at Flin Flon in Manitoba, if you look at Noranda in Quebec, if you look at Bathurst in New Brunswick, these are deposits that continued for multi-decades, for some cases 80 years, and they just continue to find more and more and more. And that's what we're hoping will repeat itself up in the Ambler mining district. So we've got a great start with 46 million tons at Arctic. There's over 200 plus million tons at Bornite, which is a separate deposit and separate type of deposit. But we know there's lots of prospectivity there. So we're very focused on advancing these projects, and a lot of what we'll be doing this year will be moving these projects forward in terms of permitting, additional drilling, and additional study work.
That's what I wanted to ask you, is what next developments you are looking towards as the year moves forward, so that prospective investors can know the direction that you're planning on taking Trilogy Metals.
So let's start with the road first. The road has, as I said, from a permit perspective, has been de-risked with the presidential decree, and what we're focused on now is approving budgets for the current year. And ADA has put forward a budget, and we're working with them to come to agreements on that budget and what work will be done, and the type of additional work that needs to be done to get us to an estimate on what the total cost of a road will be. So that is something that we're working with on ADA. But at this point, we expect to see significant expenditures on the road in 2026. We've also announced that we'll be conducting additional exploration in the Ambler mining district. And so because of the limited access there, it's a fly-in, fly-out operation. You need helicopter support. So it's a fairly short exploration season. It runs from basically May to September. So we're gearing up for that. We'll be conducting additional explorations. We'll be doing some condemnation drilling. We'll be doing some additional follow-up. We'll be doing resource conversion, and we'll be looking at some additional anomalies that are out there. So that's part and parcel of a process. We're also working with our partner South 32 on really developing the permitting strategy. We hope to be able to get that permitting process started fairly shortly, and we'll likely look at this FAST-41 process, which is an expedited process to allow for the permitting of a mine. So that we've been working on that for a considerable period of time, and we're dotting the I's and crossing the T's to put ourselves in a position to commence permitting. So that's part and parcel of the work that will be conducted in 2026. And then lastly, what we'll be doing is additional study work. Although Trilogy has done a feasibility study at the Trilogy level, at the joint venture level, which is 50% owned by Trilogy, 50% owned by the Australian mining company South 32, we have a PFS, and then we'll be moving to an FS. So we expect to commence additional study work at the project to get ourselves into a position to make an investment decision as soon as possible. So we see a very busy year this year, followed up by a busier year in 2027.
One thing we didn't touch on here, which is important for context, is the precious metals portion. Well, frankly, all of the metals that Trilogy deals with are under within a secular bull market. Rick Rule, whom we often have on our channel, talks about how these markets play out over a period of several years, 5 or 10 years typically, and that we're just still in the early to middle innings of this one. Can you touch on briefly how such an environment financially affects, and you mentioned that in passing in the beginning, but how that affects the potential profitability of a company like Trilogy with that supportive environment?
It's a good point, and I'm happy to sort of go back over that point. So to give you a bit of context, when we looked at this project and we did our feasibility study, in 2023. Based on the pricing that we used in that feasibility study, the revenue breakdown was roughly 57% of the revenue was coming from copper. About 12% was coming from precious metals, and the balance of 27% was coming from zinc, and a small portion from lead. If you look at it in the context of the current precious metals or the current price environment, it's still predominantly a copper mine. It's roughly 54%, but the silver component is now closer to 18 to 19%, and the gold component is about 10 to 11%. So you're talking about precious metals component of roughly 30%, and then zinc is about close to 15%, and lead is a remainder, which is less than 1%. So what we've seen is we've seen the mine from a feasibility perspective, which was a revenue mine that was a copper zinc mine, has now transitioned into a copper silver gold mine. Even though the metals are all the same, the metal quantities are the same, but in terms of a contribution of revenues, it's decidedly changed. So what does that do? Obviously, it de-risks the project even more because the project becomes that much more valuable. So in the context of a current metal price environment, even adjusting for the sell-off that we've had over the last couple of days, this project on a 100% basis is roughly a $4.4 billion after-tax NPV project with an IRR of roughly 54%. There aren't many projects like this out there, size and scale, in the U.S. with the capital, with the amount of capital that's needed to advance the project. So we feel like The capital intensity is low. We feel like we're in a very strong position. When you take all of these byproducts and apply it against the cost of the mine, which is typically how you do it, you end up in a negative cost scenario for producing equivalent a pound of copper because all of those costs get applied against what it costs to produce. So we've got a very valuable mine. Right now it's sitting with roughly a 13-year mine life, but there's lots of exploration potential in the district and satellite deposits that will be incorporated. And that's before we sort of factor in the Bornite deposit, which, as I said, is a standalone deposit, which is high grade, not to the same high grade nature as Arctic, but in the underground at Bornite, there's roughly 40 million tons grading roughly 3% copper. So it's a very high grade deposit on its own.
Well, this is exciting, and we're especially congratulatory to you and to Trilogy for your breakthrough in the Ambler Road permitting, because that's been a real hurdle to get past. That's been holding up progress for some time, and seems like that's moving out of the way now, and things can move forward expeditiously. We'd like to have you back on a recurring basis for updates for our viewers and subscribers, reminding everyone, of course, that early movers have an advantage, especially in a bull market, and especially as these successive revelations of progress against these goals reduces everyone's uncertainty and sets answers to those unanswered questions, and the market starts to reward Trilogy with a most likely an expanding multiple of anticipated future profitability. Tony, any final thoughts for our viewers and subscribers before we let you go?
Well, first of all, I want to thank you once again for having me back. And we're very excited about all of these catalysts that are in front of us and moving this project forward. I invite listeners, viewers to go to our website, trilogymetals.com, have a look. What you'll see is that we've got some large investors. Electrum owns roughly 20% of the company. Paulson owns close to 10%. When the D.O.W. closes the transaction, they'll own 10%. And it's important that everybody understand that management, including myself and the board, we own close to 50% of the company right now. So we're fully invested. We're fully aligned with shareholders. We see tremendous upside in terms of this project moving forward. We're in a good cash position. We've got good liquidity in front of us. And I feel very confident about the catalyst moving forward and our ability to deliver in terms of creating incremental value for shareholders. But once again, thanks for having us back on, and look forward to future updates.
Just to remind everyone, we're speaking with Tony Giardini, the CEO and president of Trilogy Metals, Inc. We'll put a link to Trilogy Metals in the description of this video for those who want to find out more. Tony, as always, thanks for joining us on Liberty and Finance.
Once again, thank you very much for having me.